Hey, what is going on? Welcome back to the channel. Today we're going to be taking a look at Harmony One. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to check that out before watching this one. It's going to be linked in the top right hand corner of your video. Now, jumping into the daily chart, we are on TradingView. So obviously we capitulated as did the rest of the market. And where we landed is the 786 over here. So this is going to be our nice support level over here at 16 cents. And as you all know, if you're looking to buy into any project at a Fibonacci support level or any support and resistance level, or you're looking to sell, I recommend selling above or buying just above the fib level, right? So if this is your resistance, then you just sell below it. If this is your support over here, you buy just a bit above it. Why do you do that? Is because if a lot of people are gonna set their buy orders at the exact price of the fib retracement, right, level, then you may not get filled. And what smart traders do is they place their orders above the fib so that when the price reaches their target, they get filled, the price reverses, and all the people that were sitting over here with these buy orders are gonna be forced to buy in higher, thus pushing the price even more higher. So that's the basic idea behind it, and this is what I do, and this is what I teach my friends and family. Just set the sell orders below the fib level or the resistance level, and set the buy orders just a bit above the support level or the fib level. Now, obviously, you can see that we got to the 16-cent price mark. We did wick down a bit lower, but I do think if you even had your buy orders at these prices, there's a chance that you didn't get filled because these are mostly scam wicks. If you go to KuCoin, the wicks over there are crazy. Chainlink went down all the way to $5.50. It is crazy. And yeah, if you're looking for a nice double bottom over here, which potentially is something that could happen, we can run into this resistance level over here at the first fib level and get rejected back down to the 786 and have a nice double bottom pattern over here. But this is just one of many outcomes potentially. So this first fib level is our previous all-time high that we set over here in September. And was it in September? Yeah, it was actually in March. It was in March. In September, we got to that level once again, got rejected from there, created the handle of the large cup and handle pattern that we have over there. That's really not important right now. And we're getting a bit overextended to the downside from the 20 EMA, so potentially look for a sell order at the 20 EMA. We may come back up, back test it as resistance, and get sent back down. That is a potential outcome as well. So if you're looking for that, that's a 24% trade, almost 25%. So a nice trade. If you're looking to sell at the previous all-time high, that is 14.5%. So yeah, once you get overextended to the downside from the fibs, you're looking for a little relief rally. The markets are recovering a bit, and you can just see a little bounce off the 20 EMA, and usually the EMAs are going to try to push you down, and the EMAs are going to be pushing you down, right? But once you start breaking above the EMAs, you're really flipping bullish. And once you have the bullish cross, that is pretty much your confirmation that you have flipped bullish right now. Here you can see that we were in this channel down pattern. We broke above it, back test as support, but obviously we capitulated, so that's invalidated right now. And if I take my mouse and extend this level over here, you can see that this level is still going to hold as support because we opened up a new candle right above this support level. You can see that we've held this level over here multiple times, and we've just came back down to this level, and we're holding it right now. So, this is a level that you should have in mind and have on your charts. This is the daily chart on TradingView. You can see how many wicks and how many touches we have off of this support line. And we just ran into it as resistance and opened up a new candle above it, which is bullish. Now we're flipping this level to support once again. And yeah, like I said, the previous all-time high is going to be your next resistance level. And you do have the bearish cross on the daily chart. Once you have the bearish cross on the daily chart, that, as you can see, the last time we had this in May, we had a very, very long period, a couple of months where we were bearish and we were basically consolidating. So hopefully this is not what we have over here, and we just have a quick flip to the bullish side, but we'll see how it all plays out. But, zooming out, Harmony One hasn't done that bad. As you can see, we are still in a perfect uptrend. We have a high, higher high, higher high, and we did print a lower high over here. But what we didn't do is we didn't print a lower low. So you have a low, higher low, another higher low. But basically with this low, you didn't go lower than this, right? So you didn't lose structural support and you didn't really break the trend yet. So what you are looking to do right now is you want to break this level over here and then break this high, right? Because if you start coming up and you get rejected from the 1272 on the fib and get sent back down and you create and you lose this low, well, yeah, then that is a potential bear market in my opinion, right? Because you're going to be losing your previous low and you're not going to be breaking through your previous swing high, and that is a sign of a bear market. Now, if we zoom out on Harmony One, you can see that we have our targets over here at the second fib level and the 2.272 and the 1.618, which is our main target at 60 cents. But I do think if we're getting overextended into 2022 with our bull market, we are potentially going to get to the $1.64 price tag, which from here right now is 731%. I think that is possible, right? Because I don't think we're going to end the bull market here in December, because we're not going to have a blow off top. We're not going to have the euphoric, rise, although we may have another flash crash in December. And I keep, warning people about this because some people, especially in the US, are going to start taking their profits from Bitcoin and their altcoins, cashing out their crypto to pay off their taxes. That's what a lot of people do, and that's why bull markets usually end in December. So, yeah, I don't think that's necessarily going to happen this time around, but we just may have another quick little flash crash. Now, jumping into the daily RSI over here, you can see that we lost this horizontal or symmetrical triangle, and we landed on a level of support. And if you just draw a trend line over there, you can see that we've held that level of support multiple times before. So this is a very important level. And if you, did your research on the daily RSI and you looked through all the levels and you potentially had this level over here, then you would have known if you come back down here, it's a great way, buying area at 33 on the index. So this is pretty much oversold, right? When you get below the index of 30, then you're officially considered oversold. But getting to the index of 33, in my opinion, is still very much oversold, and a very great, area to start dollar cost averaging. Now let's jump into Binance. So here on Binance, I did have this Fibonacci retracement set up to the downside, and you can see that we landed exactly, well, we did have a wick to the 786, but here we landed on the golden ratio very nicely. So this right now is going to be a very important support level in my opinion, because so 18, 35, 34, 5, which, well, 3, 4, 5 basically is your support level over here. So you can ignore the wicks to the downside, okay, and just focus on the candles, and you can see that we're holding the golden ratio over here of this Fibonacci retracement. And this is quite, healthy, because you came up in this wave, then you come back down, and where you usually land is the golden ratio, whether it's to the upside or to the downside. The golden ratio is your most important Fibonacci level. And if for example, you came up over here and you lost the golden ratio and you lost the previous swing lower here, then it would have been a lot more bearish. But right now, it's a perfect bounce. And plus, you have the 200 EMA over here. The purple line is the 200 EMA, and you landed perfectly on that as well. What you're looking for is to break through this resistance, this horizontal white trend line. You want to break through that back test as support, because we've been getting rejected from that area multiple times. We broke above it over here, back test as support, but then the capitulation, and the rest of the story. But yeah, like I said, we want to break through the 0.5, break through the horizontal, back test as support, and get above the 20 EMAs. This is the daily chart, by the way, as well. So yeah, very, 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 very good entry points right now for Harmony One. If I was buying into the project right now, which I'm not, unfortunately, I don't have enough funds for all the projects, but this would be a very nice point for me to start dollar cost averaging. And if you look at the stochastic on the daily chart, you're in the oversold. And each time you've been in the oversold before, you can see what ends up happening is you start coming up and getting overextended to the overbought. So yeah, the MACD is getting a bit overextended as well. You can see we're getting below the histogram. So what you should look for is a bullish cross on the MACD, which would be your confirmation of the uptrend. But as we all know, the MACD is a lagging indicator, so you are going to be late to the party if you trade based off of the MACD. But that is pretty much it, guys. Thank you for watching. I'm going to catch you in the next one. Make sure to follow me on Twitter. We also do have a Telegram chat and a Discord server where you can request technical analysis. And there is also a Patreon, which you can go ahead and check out in the description, where we do have low cap gem calls, my buys, my sells, TA video requests, technical analysis requests, all that good stuff. Great way to support me and a great way for me to give back to those who support me. I will make sure your investment in me pays off very well. Guys, make sure to check out ExpressVPN as well. They do have a very nice deal for you right now where you can get 3 extra months for free. So you can claim this exclusive deal by going into the description and clicking on the link below. So this is, in my opinion, the best VPN that we have over here. And VPN is a tool that you can use to cover your IP address, and you can change your IP address and location basically with this VPN. And what this means is, for example, if you're in the United States, you can download the VPN and change your IP address to a Japanese IP address, for example. And this way, your local network providers won't be able to, scan through your data and see what you're doing, which is, very good and very important, because I do think we need privacy. And at this point, with all the apps that we have, privacy isn't really a thing right now, but this VPN is a very nice way to kind of combat that. And obviously censorship with all the streaming services that we have. If you want to access some content that's not available in the US, a VPN is your best friend. Also, 30 days risk-free, so you can get your money back if you're not satisfied with the product. And especially for us in the crypto space, I think it's very important to keep our data safe. So yeah, thank you for watching, guys. Make sure to check them out. All the links are in the description. Obviously, if you use the links, it will help me out a little bit. And yeah, that's pretty much it. Goodbye and good night.